Welcome to Biz Wire. I'm Joseph Nordstrom in Beijing. Chinese manufacturing is still expanding, but at a slower pace to finish 2013. Two surveys released last week show orders for export and output confirmed expectations of weakening growth in the final months. The government's official Purchasing Managers Index, or PMI, fell to an even 51 for December from November's 51.4. A separate PMI survey from HSBC and Market Economics focuses more on private companies and showed even weaker expansion at 50.5. Below 50 indicates contraction. The PMI figures from China's National Bureau of Statistics tends to include more large state-owned manufacturers than does the HSBC edition. More notably, the HSBC survey showed new export orders declining for the first time since August, an indication of what could be a difficult first quarter for China's industrial sector. Also, the employment component of the report decreased for the second month in a row. HSBC chief China economist Hongbin Chu wrote with the report that the moderation of December's final HSBC China manufacturing PMI was mainly due to slower output growth. However, Chu says the final PMI sustained the fifth above 50 reading in a row thanks to a steady increase of new orders. Chu remains optimistic and says with inflation still benign, he expects the recovery that began in August 2013 to continue into 2014. Reuters reports that many economists have said China's economy was likely to show weaker momentum in the final 3 months of 2013 after the summer rebound due to slowing credit growth and a fall-off in restocking demand. Economist at Minsheng Securities in Beijing, Li Heng, says both domestic and overseas demand was weaker than expected. Li says tight liquidity at home is weighing on factory output and orders. Li predicts China's economy will expand at the same rate in the first quarter as the last, at 7.7%. He believes full year 2014 GDP growth will come in at 7.5%. The government has said industrial output may have grown 9.8% in 2013, and economic growth could come in at 7.6%, just above the official target of 7.5% and slightly below the 7.7% pace in 2012. China is a key driver of growth in the region and around the world, and economists are increasingly concerned that the economy may be slowing again after last summer's pickup. The Wall Street Journal reports that a gradual recovery in the key export markets of Europe, the U.S., and Japan should be good news for China's factories, but an appreciating currency and rising wages pull the other way. China's President Xi Jinping will lead a task force in charge of reforming the country's economy. Leaders want to put growth on what they see as a more sustainable path and away from relying on exports, credit-fueled investment, and construction of infrastructure and real estate. The plan is to boost consumption at home and transition to a more environmentally friendly, service-oriented economy. One hopeful sign is that China's consumer market continues to broadly strengthen, which should help to offset uncertain conditions overseas and keep the economy steady through its transition. You're watching Biz Wire on the Blue Ocean Network, China's first and only privately owned English-language broadcast media. Our full episode can be seen on our website, BONTV/biz-wire. In just a moment, we'll continue with more insight into the big picture of China's economy.